Let's trade some of the big movers today, including Meta, with our next guest. Joining me now is Sarat Sethi. He is managing director at DCLA and a CNBC contributor. Sarat, let's start with Meta, which you own. I mean, I guess it has the potential to build the AWS of AI in the sense that right now it's not a public cloud provider, but by building AI infrastructure for its own use, it might outflank the incumbents. Is that the bull case?
That would be the bull case, but I think investors are focused on monetization. And right now, the reason the stock really sold off of the peak is because investors really don't believe it. And the question is, when is that going to happen? How is it going to happen? And Mark Zuckerberg has been known to make these big CapEx expenditures. So the question is going to be, how are you going to get that in the future? And is this a completely different business model than the current existing one, which is really reliant on advertising and growth of user, content created by users?
Well, another part of the market in focus today, oil, after President Trump met with oil executives. I guess they're still meeting today to discuss investment possibilities in Venezuela. You own Chevron and Exxon. This does bring down the cost of oil, I guess, if it works. Is that good for these players overall? Is there reputational risk for those who go in?
I mean, exactly how you said, you guess, right? We don't know how this is going to work. And the question is, where does oil go? And one would think oil would be closer to 50. It's not. And I think given the geopolitical risks out there, whether it's Venezuela or something else, whether something happens in the Middle East, I'm not saying it's going to, but the reason you want oil in your portfolio is it's a good hedge against the volatility that occurs all over the world. And also, oil sold in dollars. So if you're getting a debasement of dollars, you're going to, the price of oil and the oil companies are going to do well. So the Exxon, Chevrons of the world are good hedges in your portfolio. We also like the Schlumbergers of the world that add technology aspect to it too. So I think having them there, given what's going on, maybe they go into Venezuela. We don't know, but that's going to be a very long tail, and there are going to be some big guarantees, and we just don't know what administration is going to be there when and if this happens.
All right, finally, the big dog, NVIDIA. It closed out the week nearly 2% lower, despite bullish commentary from NVIDIA's CFO saying the chipmaker's backlog actually higher than the $500 billion previously reported. Investors seem to be leaving NVIDIA alone for a while, but we've seen periods like that in the past that end. Can you buy it here?
Yeah, it's like reminiscent of what happens to Apple too, right? It gets kind of flat and it's a show me story. It's going to be about execution. What's the new chip going to be like? What's the demand going to be like? So right now, it's kind of capital has moved away from the big seven and really NVIDIA is a show me story. I do think as the demand builds up and the backlog builds up, I wouldn't be a buyer at these levels. I mean, it is one of our largest positions, but you do get these opportunities, not just in the stock specifically, but in the market specifically. So I think that would be an opportunity to buy it. It's a very high quality company and earnings are there, but I think it's such a show me story that you're going to get a better opportunity down the road to add more to this one.
We talked about Meta, which is one of the slower performing stocks in the Mag 7. We just talked about NVIDIA, which has been one of the best over the longer term. How do you feel about the mega cap tech leadership in stocks overall this year, and whether this broadening out means you should focus elsewhere?
Well, we like broadening out elsewhere as well because we like a diversified portfolio. That does not mean that you don't own these. I mean, you can own the NVIDIAs. We like Amazon and Google in this area too. I think they're both great cash flow machines that have great levers. But there is a broadening out there, John. And I think you can look at healthcare, you can look at industrials, you can look at financials. Those have some earnings power to them. And I think if you look at the economy and you look at where the consumer is, you can get some upside there in selective stocks. And I think that's where the opportunity is going to be. These are great companies in the Fab 7 or the Fab 10, if you want to call it. But I think the opportunity to actually outperform and create some alpha is going to be in some of the other sectors.